Morning, guys. Today I want to talk about how much you need to buy a home, because I get this question asked often from people who want to buy a home for the first time. If you guys don't know, I'm in the process of becoming an MLO, a mortgage loan originator, just because I really like what it does for people, right? If you refinance, you can lower your payment significantly, so you can make more money each month. But regardless, really the bottom line, if you qualify, the lowest you can get into a house with is 3% with a conventional loan. 3% is crazy good. That means that if the house is $300,000, for example, you're going to need $9,000. That's it. If you qualify, right? If your credit is good, and if your debt to income ratio is good, like if you don't have any other debt on your account, on your file, then you're good. I won't get into specifics now because it varies in the program. But typically what people hear is this FHA program. So I'll talk about the FHA program here, not the conventional one, the FHA. So what the FHA stands for is actually, there's a misconception. People believe that it stands for the First Time Homeowners Assistance Program. That's not what it stands for, even though you can maybe see it that way. It stands for the Federal Housing Administration. Okay, I have to lower the little sun visor. It stands for the Federal Housing Administration. So what this branch does is they don't give you the money themselves, they insure the loan. Okay, so they don't provide funds, they tell a lender, hey, if they default, they're covered by us. But you pay, it's called a mortgage insurance premium every month, MIP. Not to be confused with PMI. PMI is private mortgage insurance. That's with conventional loans. So most of the home loans are conventional. All right, that's what I have. I've never used an FHA because I never had the need to. My credit has always been a little bit higher, except in the first home purchase. I had no credit there, but that's a different story. I couldn't even qualify for an FHA at that point. FHA, what do you need to qualify for this loan? So you can go, your credit score can be as low as a 500. If it's anything below 500, you won't qualify, like at all. It's one of the rules, hard rule. You will not qualify. Now, the recommended minimum is 580. So if you're in between 500 to 579, I believe you need a down payment of 10%, which kind of it defeats the purpose of an FHA, which is to go into a house with a lower payment, right? 3.5 is the minimum for an FHA. So 3.5 is the minimum down payment you would need for an FHA. So that's $10,500 down plus closing costs if you bought a $300,000 home. Okay, so that's what you need for an FHA. 3.5, but how do you get 3.5 and not 10% down? If you have a credit score of 580 plus. All right, so that's the way to do it. If you really want to take advantage of the FHA loan program, then you need a credit score of at least 580. That way you have a better chance of getting the 3.5% down, the very minimum. Also, what's another hard rule? Your debt to income ratio. Okay, so there's a thing called a front end income ratio and a back end income ratio. I won't go into specifics in this video, it's kind of long. But the front end, high level, is the house payment or the mortgage payment that you would pay if you were to buy that house, divided by your monthly gross income. So that's it. Just the debt of the house, the monthly payment, the principal, insurance, taxes, and interest. Principal, interest, taxes, and insurance, PITI, divided by your gross income, monthly gross income. All right? That can't be more than 31%. So if it's 29, you're good. 30, you're good. 31, you're good. 32, you can't qualify anymore. So make more income, okay? Or put more down to lower your house payment. Now, the next one, which is a little bit more hard, or a little bit more difficult, is the back end ratio. And that is, it cannot exceed 43%. So how do you calculate the back end ratio? High level, calculate the mortgage payment just like you did for the front end, plus any other monthly debts that have more than 10 payments left. So if you have a car payment and you pay $300 a month, but you have 5 payments left, you don't include that. That's good. If you have a lease, you have to include the lease, no matter what it is. All right, if you have student debt, if you have some other debts, credit card debt. The way the credit card debt is calculated every month is by the minimum payment due. So if you owe $10,000 in credit card debt and your minimum payment is $150, they're going to add $150 to your debts every month. So if your credit card debt, your auto lease, your car payment, if you have more than 10 payments left, all that stuff, not your bills, nothing, only things that you can't cancel, only things that you actually owe. Like if I cancel my phone today, that's fine. You know, I don't owe my T-Mobile anything, okay, except if you're paying for your phone, but nobody counts that. So if you add all those things up and you divide it by your gross income, monthly income, and it's less than 43%, then you're good. So if you get those two things done, you can qualify for an FHA. There are many reasons why I don't recommend an FHA, but that's a different video. For now, just so you know, if you want to buy a home, really, and if you qualify, all you need is 3% for a conventional, 3.5% for an FHA. And I hope you learned something from this video. Buying a house is attainable. It's attainable in the sense that you don't need much down. But unfortunately, these homes are so expensive now that it's really difficult to afford the monthly payment, which kind of makes you put you need a bigger down payment, unfortunately, as a result. So even though you don't need a lot to get in, you kind of need a lot to maintain it. Unless you find the right price, then and the right, you know, if it makes sense for you, then do it. So I hope you enjoyed this video. More like these to come. I really enjoy real estate. Stocks, I enjoy stocks, but I don't like analyzing as much as I do real estate. And real estate is fun. You know, I own a few homes. I love real estate. You live in a house. You don't live in stocks. I love stocks as well, though. All right, so with that being said, I have to go tutor somebody right now. I hope you enjoyed this video, and see you guys later. Goodbye.